Real Estate here at Champions Real Estate Team here at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name's Mark Wehner, team leader of Champions Real Estate Team. So joining me today is Russ Williams. So we jump on every Wednesday, give you a rundown what's going on in the real estate market over the last 7 days. Quick tip that we always give, at the beginning of each video. So quick tip today is kind of one thing. I had a coaching session last night with a first-time home buyer, and just had a good hour and a half conversation with them and getting a game plan of the thing. One thing I kind of that I say to a lot of clients and potential clients is just little things that we know and that as agents that can kind of make a big difference. And one of those things is that for every $1,000 that you decide to put down on a house or the purchase price adjusts up or down, that's going to affect your monthly payment by about $5 to $6 a month on that monthly payment. And so it just depends on what the interest rates are. And, obviously, if the interest rate's lower, that's going to be a little lower number. But, a good ballpark area is at $5 to $6. So some people are like, hey, I want to save up money throughout the year. I want to save an extra $5,000. Then maybe we'll jump in the market, maybe this fall in the winter when there's not as much buyer competition. Well, that $5,000 is only going to save you $25 a month on your house payment, which I think is like crazy, and my client last night, he kind of equated to, car loans. He goes, for every 1,000 it equals $20 on your monthly payment is what he was saying. So it's just every little thing like that. When you have an amortization schedule, they all have their equations that come out to that. So that's just one quick tip. So when you're thinking about that, I want to save up more money to buy a house. Well, is that saving more money going to outpace what the market is doing? If the market's going up at a decent clip, saving more isn't necessarily going to save you more on your monthly payment if that's your goal to get a lower monthly payment. So that's just our quick tip today. So $1,000, either on a down payment going up or down. If you want to put $5,000 more down, or not, that's going to affect, about $25 a month on a house payment. Same thing when you're looking at the purchase price. Sometimes clients are like, well, I don't want to pay $1,000 more for the house, and it may be an awesome house. And it's like, well, do you want to miss the house for $5 a month? That's, up to your clients at that point. But anyways, that's our quick tip today. So $1,000 equals about $5 to $6 a month on your house payment. So let's pull in. We got some new graphics today, everybody. This is going to be exciting. So let's see if I can. Oh, I don't want to do that there. Of course, I pulled up the wrong thing here. Why wouldn't you, right? All right, we'll get this here in a second, right? There we go. All right. Now we're rocking and rolling here. So look at our numbers. These are the same numbers that we look at every week. So I just kind of made a little different slide here. But new listings basically at 577 have gone live in the last 7 days. 427 of those went under contract. And we had 357 new homeowners over the last 7 days. So what we're seeing here, from a big picture, how is the market? So basically the market, our listing activity has gone up a little bit. Our contracts, kind of right around that 430. I think last week was like 456. So it all depends on too, like when I'm running these numbers, what time of day. So I did this morning. I think last week I did around lunchtime. So that little blip in there as far as that time frame gets that numbers there. So what does this mean to you? So when you kind of take a look at what the market shift is doing. So last week we were at a 3.7 month supply of inventory. This week we've kind of shifted, as you can see the red dot there, kind of more towards that seller's market. So seller's leverage is improving. So who has the leverage? There's less homes on the market, more buyers coming to the marketplace. Kind of what does that all mean to you? From a seller's perspective, you may be getting, pricing matters. So pricing it in that buyer pool so that you attract the most amount of buyers in that aspect of it. Obviously terms, favor that seller. So, some buyers may be foregoing home inspections, cash offers, things of that sort, faster sales. So obviously less time on the market. For buyers, obviously that's more competition, less room to negotiate. Obviously the same thing with the terms for the seller. You may not be doing, getting closing costs paid for, and then home inspections and stuff. And then ultimately, strong offers are going to win. How can the thing I tell my clients is my goal as an agent is to get you a seat at the table with that seller. rather than if it's a multiple offer situation, that agent calls me and says, "Hey, Mark, sorry, unfortunately, we went with a different offer." Well, what could we have done differently? Well, there's higher over here, this, that. You can't really get into that, arena anymore because they've shut the door on you. But if you can get that seller's agent to call you back and say, "Hey, Mark, do you think you would, forego doing a home inspection, or, would you change your closing date or things like that?" So getting that call back from that seller gives you an opportunity as a buyer to make that decision, rather than that seller making that decision for you through there. So, as we see there, kind of what's both sides of the coin there from the buyer and the seller. And then we'll jump in here with Russ and get a rundown of what's going on in the mortgage side of it. So how are we doing on the rates here, Russ? You're on mute. Mute. There you go.
There we go. Sorry about that. And we've actually seen rates moving around quite a bit. They're rather choppy. 3 weeks ago, 4 weeks ago, we were talking that we had the lowest rates in 4 years. Since then, we've seen mortgage rates move up to a point where we're currently right at the level we were in August of 2025. And most people I talk to right now are saying the same thing. I'm just going to wait for rates to come down. And I get that. It sounds logical, but here's the part that's getting missed. Rates haven't been dropping steadily lately. In fact, with what's going on in the Middle East, there's been some infrastructure disruptions that will affect global oil. And so they've been bouncing around, and lately they've actually moved up relatively quickly. And with the infrastructure damage, they may not come down quickly. So what we're seeing isn't a smooth downward trend. It's a volatile market where rates can jump fast and only come down a little bit at a time. And here's why that matters, Mark. If you're waiting for, let's say, a quarter% in improvement in rates, you're taking a risk that the rates might not move a half percent higher before that ever happens. And we've already seen that kind of movement in just a matter of days in the last 3 weeks. So that's the part that people aren't talking about. Waiting isn't neutral right now. It's a decision with some real risks attached to it. So that's why it's important to have a plan put together with Mark and his team. That doesn't mean you shouldn't be thoughtful about timing. It just means you need to have a strategy. Mark always talks about a game plan. So instead of trying to time the bottom, maybe the better approach is to ask, what payment am I comfortable with today if I'm financing a home? And does the home I want still make sense at that level? Because if rates do improve later, and again, I don't know that they're going to move down anytime soon quickly, or any measurable amount, you can always adjust with a refinance or a recast. But if rates move higher, your options have shrunk. So the real question it isn't really, will rates go down? It's what happens to my plan if they don't. That's why it's important to have a plan put together with your real estate team. And that's why I'd recommend getting in touch with Mark and his team.
Yeah, and I think like the coaching session I had last night, that client, they're thinking of pulling the trigger or getting, end of this year. And that's awesome because it's March, and he has 9 months to basically kind of get his ducks in a row, and talk with Russ and get a game plan from a lending side of it, get an education on, what the numbers look like for him. And then, maybe between now and then, all of a sudden a good house pops up. He's ready to go if the timing is right for him. And that's a huge thing I talked with them about last night. It was like, it's not timing, like how you kind of touched on timing the interest rate. So it's like, hey, if the payment you're comfortable now, then let's rock and roll with it because we don't know what prices are going to do later. Maybe they're going to go up, maybe they're going to go down. But historically, you've seen some dips, in my 18 years, but steadily, over the last 5 years, we had what 47% increase, in average sold price. So that's a big increase, almost
Yep.
10% a year. I was looking at houses last night when I was looking at the coaching session. One of the houses that sold in 2020, 2014 or whatever, but basically it doubled like $200,000, in that side. And it's like, holy shnikes, so there's some of those things that you look at those situations out there and it's just kind of figuring out what's best for you. So if we can help you out, give us a holler. We're happy to sit down, do a coaching session with you. Whether from a financing perspective with Russ or from just the home buying process, home selling process, with anyone here at our team. Obviously, you can like, subscribe, all that good stuff. Every week we jump on here, give you a good rundown of what's going on in the market, give you a quick tip, and appreciate everyone listening. If you have any questions, like I said, reach out and we will